welcome to the Cultivate Smart podcast, a platform for innovation, transformation, and disruption of our global marketplace. This is a cross-border show as my co-host Sashien is based in Ottawa, Canada, and myself in New York City here in the United States. Sashien, welcome.
Thanks, Carl. Always great to chat with you.
Always, always. Lots going on now. What's going on up north in Canada? Like, how are things going? Are
Yeah,
are the shutdowns as widespread as here in New York City?
yeah. I mean, I haven't been looking closely at the data in North America specifically, or even just United States, even New York. I mean, I know you guys had a lot of cases there, and it seems like things have been improving. Broadly speaking, I guess you could say, and I've seen California as well. There's a lot of issues it seems down there, but I'm hoping things get better as we move on, to 2021 here. And of course, there's some talks of vaccines, Carl, as well. So, but uh, regardless, I think there's some really interesting things happening right now in the markets. A lot of innovation happening in regards to those vaccines, and ultimately, a lot of things, at least up north here in Canada, are definitely improving. So it's nice to see that our cases, specifically even in Ottawa here, have been going down. It's quite frankly very tough to see though places like Toronto, where there's obviously a large population, where majority of Toronto and the Peel region, for example, are shut down. So it's really just the big box stores, takeout for restaurants. Their situation is far worse than Ottawa. So thankfully, we're all keeping safe over here, and things are getting better, it seems, as a whole.
Similar situation here in the US. Obviously, California is facing a 3-week lockdown now. And here in New York City, we're currently at a 5% positivity rate in COVID testing. So it's actually nearing where we were in March. But even with that, like you're saying, new administration coming in and vaccine hopes, 2021 does look a little more promising than most of 2020.
It does. It does. I definitely agree with you.
And with that, a lot of opportunity here in the markets too. I mean, Joe Biden is a big green energy guy, though. Between the vaccines, green energy, and other initiatives, AI, 2021 is going to be quite the opportunity on the investing front, which kind of ties into our topic here today, which I want to let the audience know, though, Sashi and I have a lot of very in-depth, interesting conversations offline, and we'll just talk for like, I think last time we spoke a few Sundays ago, we
Yeah.
actually spoke for about like an hour and a half just talking about the mindset, the theory behind investing. And we kind of touched on something which was investing success. Is it skill or luck? And you had such an interesting take on that. And I said, listen, we have to do an actual show on this because it's something when you're getting advice from a portfolio manager and they have a track record of success, you have to wonder at times, is it skill, is it luck, or is it a combination of the two? Sashi, what's your take on this?
Yeah, it's a really deep question that I honestly spend a lot of time thinking about. I meet a lot of investors coming from the traditional side of things. So, you're talking bond markets, you're talking fixed income sort of investments, you're talking just a lot of things that happen in the mutual fund markets or even just ETFs. I mean, it's a very different class of investors, Carl. I would say they are, very traditional in their approach. They're looking for maybe 5 to 7% per year in terms of returns. Very modest sort of returns is what they're sort of looking for in their portfolios for their clients and for the folks that are invested. And so when you look at sort of just even taking a step back, a lot of those types of decisions have ultimately over time, I think, you could argue that those have done traditionally very well. But now, as I see it, especially in the way that the markets are turning now, there's a lot of success being driven on many different vehicles. So take, for example, SPACs, special purpose acquisition companies. Those are opportunities through a reverse merger that would allow an investor to be on board, being backed by a hedge fund manager or a successful investor could be raising money through this blank check company And ultimately, a retail investor can get involved as low as about $10 a share. So the way that that works is that you can essentially get in at the same point or the same dollar cost average as that fund manager. So you're almost at equal weight in terms of your risk, and the downside risk is almost nothing when you can get in that early. So what I'm seeing now, Carl, is now this sort of what they call a SPAC bubble or a SPAC frenzy. There is this enormous amount of capital being deployed into all these interesting companies. You know, I'll give you an example even. You know, there's Luminaire Technologies just recently. You know, they finished their merger, so now it's trading under LAZR. That's a stock that, you know, several months ago was about $10, and now it trades at almost about $40. So you can imagine if you got in at about 10 or even 11 bucks or so, it's almost a 4x, Carl, right? So there is, you know, numerous companies like these that are just popping up, and I'm seeing them daily. I'm reading 10 to 15 tickers at a time even. There are an enormous amount of SPACs coming out here, and it's allowing retail investors to get involved. And, you know, at a minimum, within several months, they can, you know, get a double. You know, they can get 100% of their money returned back to them. But many of these investors are seeing 200, 300, 400% upwards. So it just, you know, even just again, taking a step back, you know, the question is, you know, how do we as investors take our approach when it comes to investing? And then how do we actually look at allocating capital effectively? And is it purely luck, skill, a combination of that and timing, or is it really the success of that investor? I think it's really a combination of all these things, Carl, because there is just an enormous amount of opportunities being put in front of us. And it's just up to us to be able to look at the deal and figure out how we can deploy the capital appropriately and timing that. But I think it's also rubbing, you know, the ego quite a bit for many investors that I see even online when I go through StockTwits or Reddit or some of these places. You know, you're seeing people that maybe just got into investing recently, or even experienced investors feeling very proud and very fortunate to obviously have the level of returns that they're having right now. But there's also a lot of ego being driven into that as well. And it can get very interesting when I think about that too, because it's hard to really define your success in this sort of approach. What are your thoughts, Carl?
Well, you know what? We spoke a couple of weeks about this and we touched on the ego aspect of investing. And I actually think a lot of investors, they are playing on the ego angle. This has worked for me in the past. This is my stand on this, and I'm going to stick with this. And the advice you're getting sometimes, sure, there is some level of, hey, skill, research, theory behind this, but this has worked for me in the past, and I think that's what's being passed down a lot. But let me ask you this, though, because I actually agree on that portion, but I'll say this, though. Echo chambers are also something that is, it kind of plays into this, because when you're an investor, the advice you're looking for, whether it's from investors, portfolio managers, and as such, or whether you're researching this online, you're only going with a certain angle. You're only going to a certain resource to get that information, and you might not be taking other factors that could actually lead you to a better outcome.
It's interesting, right?
It is interesting. It is interesting because I know, well, just like, you know, others, I do my research, just like
Yeah.
millions of Canadians and Americans. And the thing is, depending on how you go about finding your information, you're not going to get a varied opinion if you're only going to certain sources, though. I think it's basically a lot of it is timing, which will
Yeah.
tie into luck. You mentioned all the SPAC bubble, as you mentioned, that kind of exploded this year. And a lot of that could be timing and luck, right? I mean, even though it takes some
Yeah.
skill to do your research into what SPAC I should direct myself into, it's a little bit of timing there because you're getting in early. All right. And if you get into a SPAC now in 2020, and now we're moving into 2021, and
Yeah.
this kind of takes off for you, and let's say you double, as you had mentioned a couple of seconds ago, is that timing or is that skill?
You know, I totally agree with you. It's a combination of all those things. At the end of the day, to generate some level of returns, there has to be some timing there and there has to be some luck. But ultimately, I don't think if you were to say, you have hundreds of thousands of dollars of capital readily available, if you were to deploy that in, let's say, 10 or 15 of these SPACs that I'm seeing right now, I think what I would say is that, if you were getting in at the low end, which again, I mentioned about 10 or 11 bucks even, I mean, there's very little downside risk at that point because I would say the vast majority of these SPAC deals are going to go through, and that means the ticker is going to change. There's going to be more press press releases, more coverage. Places like CNBC and all the major outlets will cover those companies. And so you're going to get an enormous amount of viewers as a result of that. I think just the amount of noise that I see on stock forums and places online that are basically investigating these deals and having folks, basically promote them as well. There is a lot of people getting involved in these deals because they see the opportunity, of course, that's in front of them. So, at the end of the day, you do have to spend some time. I could buy something for $13 or $14 today in hopes that it will be 20 or $30. Like I said, I've seen many of these SPACs go through and they trade at a minimum of $20, I would say. Most of them tend to be in the 20s to 30s, even higher, um, post-merger. And so that typically happens in less than 6 months as well, which is quite interesting. But, I just look at that and I think to myself, well, there has to be some research that's done because ultimately you need to understand what that company does, what the valuation sort of means, and what does it mean post-merger. You have to understand the industry, the size, the competitors, who are they basically going against? Take, for example, a company like Metromile that, Chamath and Mark Cuban are now backing. That's a business that's ultimately going to disrupt the car industry, the car insurance industry, and ultimately it's going to serve a great purpose for what I believe America really needs to see is the fact that you can get involved in the business like that and get in at around 11 or 12 bucks at this point even as well. The SPAC that they are going to launch, I think post merger could be, easily minimum 20s to even the 30 sort of dollar range. So I'm seeing a lot of these SPACs, and I think you need to understand how they work, first of all. So you have to understand the mechanism. You have to understand the entry point because you can get in maybe at 14, 15, 17 bucks, maybe even feel like you're late to the party. But that doesn't mean much if that thing can go to about 30 or 40 bucks, let's say, in the near term. It really comes down to many different factors. I do think there's a lot of luck and skill involved in that, but I think at the end of the day as well, it has to matter on the actual company itself. So you have to understand the business, the industry. Some of these industries aren't as hot as others. You're seeing things like 3D printing, for example. You're seeing things like Metromile, which I just described. I think Metromile is a massive business in the making because it allows Americans to be able to use their car insurance, but ultimately pay a fraction of the cost that they probably would to begin with because it's really based on their mileage and their usage. So it goes against a lot of the incumbents, and so there's some interesting points you can make around this, but I think, you have to time it. You have to do your research. And by doing the research, you really understand the industry and the company that they're basically building. And ultimately, after that, once you decide that you can find that sweet spot on the entry point, you can then understand if this is going to be maybe just a $20 stock post-merger or if it's going to be a 30, 40, or $50 stock post-merger. And I think a few other factors come into that, including even the amount of press that goes out afterwards, the amount of shares that are available as well. Some of these I'm seeing, Carl, I mean, they're only 9 or 10 million shares on the float. So as you know, I mean, when you have a low float stock, when it is being bought up, that thing can run really fast and move to the uptrend very quickly. And alternatively, the same way as well. I mean, if it was selling quite a bit, it would fall pretty fast. So, there's many different factors, and I think there has to be some technical sort of analysis that's also brought into the picture as well, because, if you understand the float size, you understand the industry, the competitiveness, and ultimately their advantage in that respective company, you can see whether this deal is going to be a 20 or 30 or 40 or even higher sort of post-merger deal.
So it's interesting with the SPACs though, like, the SPAC explosion this year. Where do you see SPACs going in 2021? We had such an unprecedented jump this year in the number and just the sheer number. Where do you see next year?
Yeah, honestly, it's very hard to say, Carl. Like many things, I think there's obviously many different bubbles in the markets these days. Tech has always obviously been very successful and always traded much, much higher with the multiples. So it's really hard to say what's going to happen. This pandemic alone, taught me many different things. I mean, when I look back at like March or April, a lot of the things that I was looking at, I was actively trading was a lot of tech in general and holding on to things like that. But I was honestly looking at a lot of biotech. I mean, a lot of these things, we look at them and we think, these are just literally like science experiments. But many of us thought, I just thought to myself, even, as I spent sort of that time in the spring after this pandemic hit, what was going to happen. And I realized that, Bill Gates, for example, behind a massive company in that space, looking at a vaccine, I looked at companies like Novavax, for example. A lot of these were trading only at 10 or 15 or $20 at the time. And since then, they are now trading in about the 100, 110, 120 range and upwards. So it's just interesting because even if you were to maybe, you know, deploy some capital into a few of these different vaccine related pharma sort of companies, I think by now you would have made an enormous amount of money. So it's just interesting to see what's going to happen with that and how that relates to even SPACs, because these vaccine sort of companies are becoming like the bubble as well. Many people got in early, but who's to say how much that stock is going to be trading maybe next year once these vaccines are out? Will they tank? Will it be investors that maybe bought in early but now are selling? And I think the same way applies to maybe SPACs. When you ask the question around a SPAC bubble, I think to myself, well, if there's a lot of investors which I'm reading about, daily, what are their plans? Because if I'm an investor in a SPAC, I want to ask myself, well, if I can generate these types of returns, what's going to happen if everyone starts to sell post merger? Because if people got in at $10 and they're selling at 30, chances are that's going to make a significant impact to the stock if many people are selling. So, this idea around, generating returns and making money is one thing, but then the idea is that are these SPACs going to survive? Are they going to have enough buyers post merger after all the action is there? When the party's on, everyone's dancing, Carl, but then what happens when the music stops, right? It's kind of that same idea that, when you look at these SPACs, they're on fire right now. There's a frenzy. There's new ones popping up every single day. I'm looking at something new. I'm seeing things from Bill Ackman. I'm seeing things from Chamath and Mark Cuban. I'm seeing many different things from many different industries. But the question is, you know, 3 months from now, 6 months from now, 12 months from now, what's going to happen? And I think there's going to be a lot of buying that happens now. There's going to be a lot of money being made. And I think I'm seeing many of these investors, retail investors specifically, that are deploying money into one SPAC or maybe multiple at once. And once they generate the returns that they're looking for, they're on to the next one. So what does that mean, broadly speaking, for the SPAC market and the bubble maybe in which we're in? It's hard to say, but I think that there's going to be a lot of negative impact to those stocks post-merger down the road. And I hope that the money being raised can obviously deploy some really good, money being put back into the company, ultimately creating some good jobs and an incredible business, because that's the mechanism in which the SPACs really tend to operate in, is this vehicle that would allow an investor to be involved as early as the main folks involved in that. So a hedge fund manager, for example, and allow them to raise enough capital so that they can then build an incredible business. And I think there are going to be some incredible businesses being built through these SPACs. Like I mentioned, LAZR, Luminar Technologies. I mean, that's a business that's in the electric vehicle space. We all know that EV is a big deal right now, right? We're talking Tesla. We're talking a lot of the Asian companies right now. We're looking at rare earth materials. I mean, there's so many things happening in EV right now. It's incredible. And fuel cell sort of technology as well. So it's hard to say what's going to happen, but I think if the pattern is sort of the same, in which investors are essentially just flipping, maybe pumping certain SPACs and then basically exiting, it's going to have some level of impact in the markets.
Which directly plays into the skill aspect of things, because course correction is a very important aspect to this. You have to be able to look at the road ahead and know when to get out. And you're seeing a lot of investors are getting out when they feel like they hit that number they wanted to hit, and they take their money and just reallocate it elsewhere. So, quantifying success, how do you quantify success? Is it through money? Is it through other criteria that we're not talking about? How do you quantify a successful approach?
Yeah, I think, for me, some of my most, you know, proudest achievements, I guess you could say, is the ones that I really took a enormous amount of time to basically look into that company and look into the success of where it could be driven down the road. And I think too, I mean, I've had a lot of people that kind of shook their heads when they looked at Tesla a few years back, and I was a big proponent of Tesla, the same way as many companies that you see now that have obviously perform very well in the markets and as a business. There's always going to be naysayers, Carl. There's always going to be folks that are sort of, in my opinion, are sort of maybe narrow-minded or short-sighted. I mean, there's a lot of that sort of action that happens, and I think um, what you need to do ultimately when you're kind of making that decision is take a step back and really divorce yourself from the situation in which you're in. You can take the success from what you had maybe in EV, or take the success that you had in tech and apply the same principles to the businesses that you're looking at. But ultimately, you have to do your homework. You have to understand the market cap, the industry, the size of that company, its competitiveness. How does that business stand against all the other incumbents in the market, let alone the public companies that they're trading against? And what does that mean for the market? And I think if you take the time to do that, you can make yourself into sort of put yourself at least into a better position where you can then make a successful investment decision. When you think about that success, though, I think monetary success to me is important. Sure, it just means that I was able to do sort of the task or the job in which I was sort of doing when I was deploying that capital effectively and correctly. But I also think there's a lot of value in some of those investments that maybe you swung and you totally missed on, or the ones that you thought would be your grand slam or your home runners that ended up just being small gainers. What's better, what's worse? I mean, at the end of the day, I think you have to be proud of the investments that you're in. I don't think it's purely always for a monetary gain. I think for me at least, generating good returns is an amazing thing, and a skill I think that I've now honed over the years and I've gotten better at. But I think that ultimately when I do this, I get increasingly better at making good decisions through the ones that may have not turned the way that I thought, the ones that may have not been very successful at all, if any. And I think when you do that, you allow yourself to really analyze what happened. Because, like we were talking about earlier, Carl, when success is running and everything is doing well in the markets, let's say, take for example a green day in the markets. We all know that many of these stocks are performing on those days. Some of course won't, but we know on those green days, for the most part, broadly speaking, that our investments, our stocks, our portfolios, a lot of those are performing and they're doing well in those days. But we can't always say the same on those red days, right? Those days where there's negative impact to the indices. So, it's hard to say how we can generate that success, but when we look at it, we have to ask ourselves, how is that being driven? Because at the end of the day, we all have this sort of expression that when the bull market is running, everything looks great. In the same way you look at it, when the party's moving, the music's on, everyone looks like a genius, Carl, right?
Oh,
But
yeah.
what we sort of define as a successful investor is often the ones that can turn through the tides. I mean, how can they be successful when the market is red? How can they be successful when the indices are dropping? How can they be successful during a pandemic? Just taking a step back again and looking at what happened in March and April. I had to effectively change my approach and my strategy, and I was becoming more active in my approach and finding new companies in biotech, finding new tech businesses, trying to understand the almost the repercussions, you could say, of this pandemic. The issues that have been brought forward for investors and just as regular consumers. I mean, it's changing the way that we are investing. It's changing the way that we are buying things. We're seeing a lot of money going into big box stores because ultimately those are the ones that are always going to be open at this point. A lot of small business retailers are not so much open for walk-in business. So we're seeing obviously a lot of e-commerce that's being driven upwards, right? There's a lot of buying on Amazon. There's probably a lot of buying on Alibaba. There's a lot of business being driven online. And so you have to take a step back and think about how these trends will occur. And if you take the time to analyze, I think the macro trends ultimately, you'll become a much more successful investor as a result, because you have to look at what is going on in the markets, what is happening to consumers, what is happening to businesses. You and I chat a lot about smart building technology, office spaces, workplaces. The vast majority of us that had worked in an office building, worked in an office space, we're all working from home. So what does that mean for companies like Zoom, for example? I mean, if you look at their stock chart, from the last 6 months or 8 months, for example, through this pandemic, you would have seen that the stock has grown tremendously. And so it's the same way when you look at a company like Slack. You probably saw the acquisition recently with Salesforce, Carl. I mean,
Oh
these
yeah.
are interesting businesses that are thriving through these times as a result of their amazing technology and how it brings us all together. So, these are the secular sort of trends that you look at, and some of these macro sort of elements that you think about when you make your investment decisions. And through this pandemic, I've really had to change my approach to how I invest and how actively I invest and how I look at things, because I'm really trying to dissect where money is going to be deployed from the hedge funds, the fund managers, the pensioners, all the way to the retail investors. Because if you understand where the money flows, Carl, you understand how to become successful along the way, because you know what markets are going to be propped up and which ones are going to be moving downwards. So
And is
it's
it
an
okay?
interesting way, right?
It is, and it's interesting what you touched on about once this pandemic began back in the spring. I can't believe we're in December now, and we're approximately 9 months into the pandemic. But where we've come in the beginning, you touched on Zoom, you touched on other technologies, e-commerce, a lot of things that have grown over the past 9 months because of our new trends. Everyone's working from home.
Yeah.
Retail, yeah, right. Retail has definitely changed over this time. And now we touched on the vaccines at the top of this show. Now, with the vaccines, we're hearing conflicting information on, will things get back to 50%? Will it get back to normal by June? Here in the US, they're expecting every American to be able to get both doses of the vaccine by June. That's the
Yeah.
speculation that's out right now. But how will this affect behavior? Because this is the interesting thing is we had all these new macro trends you talked about that happened in the last 9 months. Now we go into 2021. The first half of 2021 will look similar to what we're experiencing right now. What's going to happen in Q3 and Q4 of 2021? And what kind of trends can we expect at the back end of the year, assuming that we get to, well, not normalcy, but 50% normalcy? What can we expect?
I think that's a good point. I mean, there's going to be, just thinking about those trends again, there's going to be obviously some improvements along the line here. It seems that every month that goes by, we have some more success, at least amongst these vaccines. Like I said earlier, I mean, a lot of these are, to me at least, science experiments that, I think a lot of these multi-billion dollar pharma companies that are backing these and putting these together. I mean, Canada, for example, America, I mean, we all want to get this vaccine, and it seems like UK was the first one to grab onto that, right, with Pfizer there. So, there's a lot of these that are coming out. My question is, how effective are they, first of all? Do these companies want to just get these out in the hands of every consumer as quick as possible? A, because they want to make money, and B, they can return money back to shareholders, and C, they can just be successful through this whole process of trying to get their vaccine in the hands of these consumers. And then what does that mean for the government, right? What does that mean for the Canadian government, the American market, the UK? Asia, all these places, everyone's sort of, collectively working together, Carl, in many, many, many different ways. But independently speaking, I think they are also making those decisions for their respective country. So then you have to take a step back and say, well, if these vaccines are coming out, what does this mean for, airline industries, for example? We're seeing a lot of airline stocks coming up, like Air Canada. I think, when Buffett made the decision to kind of pull out of the American Airlines there, and many of his investments, I think he kind of took a different approach in that. But ultimately, I thought even that a lot of these industries would rebound over time. It would just take the time to get a vaccine potentially to allow these airlines maybe to even operate. I think this is the path in which we're heading, Carl. I think, if we can get to a vaccine that's effective, which I'm not so sure we're there yet, but I think we're making strides at this point. If we can get to the point where we have an effective vaccine, I think airline travel will resume effectively and somewhat normal. I think that, more travelers will be going to places down south, overseas, and whatnot. More business travel will come back to life. More events may come back to life. But again, I think we need to also take a lot of time before we even get there, because it's going to take a lot more than just getting a vaccine in the hands of the consumers for these industries to get back to normal. I think events are not going to be the same. It may take a couple more years before we get back to that sort of movement again. It may take another year or 2 years before we see a lot of people going back to offices in a safe manner. It's going to take time ultimately for all the industries to kind of rebound. But I think that we're making the strides to get there, Carl. And I think that, we just have to be so sure of these methods that these companies are taking when they're putting together a vaccine, and ensure that, at the end of the day, our government has our back, essentially, because, they are having to sort of legitimize these types of, what you think of them as transactions almost. At the end of the day, they're sort of responsible working with that company to ensure that that vaccine is safe for all of their citizens. And that's a big deal. That's a big responsibility. And it's something that we can't take very lightly. We have to see what is the most effective approach for our countries. And that's a big thing to just think about for a prime minister or a president to deal with. And I know Joe Biden, for example, has a lot on his plate. He's talking about clean energy, for example, a lot of stuff in EV. He's a big proponent of all those industries. But I think ultimately he has his work cut out for him. What are your thoughts on that?
I think it's going to be interesting to see the way the landscape transpires in 2021, because there's so much unknown right now. And depending on how the events develop, that's going to shape what we see. That's going to shape, will the airlines come back? Will there be a return to the office? There's so much unknown right now. And basically, there's optimism. And the
Yeah.
optimism is driving a lot of movement right now, but we don't know. We don't know, and we're not going to know. Right here in the US, I believe we have healthcare workers and other essential folks who will be getting the vaccine beginning this month. Like right now, we're in early December. We're dating the show a bit right now, but there are going to be people getting the vaccine. It's going to be such a small amount. It's not going to be until we get, I'm going to say about 50% of the population vaccinated before we know what the outlook is looking like.
Yeah.
Obviously, as I mentioned, by June, the hope is that every American will have access to it. But the real issue is how many Americans will take it? How many Canadians will take it? Will it be mandated? These are questions that will determine where we go from there. And it's going to be really interesting to see where we go. But month by month, there should be an improvement. And I'm hoping that the markets respond that way. The landscape responds that way. And I'm sure it will, as it has here in 2020, an eventful 2020. We're gonna leave it here, Sashien. I think this was we went all in there. This was a very in-depth conversation.
Yeah, it was very good discussion points, Carl. It was always good to chat with you about some of these good items. And I think it's really important for investors and consumers alike. I mean, at the end of the day, we're all in this together. We're all in sort of the same sort of situation now when you think about it. We're limited in terms of the resources we can access at this point. We're obviously concerned for our safety, ourselves, our families, and others. So I think it's really important to have these discussions. And ultimately, if we work collectively, I think we can, again, when we talk about the markets, we can make money together. We can ultimately help the businesses that are struggling at this point, or help many of these businesses stay away from any sort of insolvency. I mean, these are the types of things I think we could continue to talk about, and ultimately it'll help everyone around us.
And we will keep that conversation going here on Cultivate Smart, your platform for innovation, transformation, and disruption on our global marketplace. For Sashien, I'm Carl. We'll catch you next time.